Hello everyone, in this video we are going to talk about why Indian rupee is falling against US dollar. Now for the sake of understanding, I have oversimplified the things. The global economic scenario involves a lot of complications. In this video, we are going to cover following topics. First, what is the principle of demand and supply? Second, how international trade works. And in the last, we are going to talk about the factors that are responsible for depreciation of rupee against US dollar. So, what is the principle of demand and supply? Now, in simplest term, if we consider that if the demand is higher than supply, then the price will increase. For example, the price of aeroplane tickets increases during festive season because more and more people travel during festive season. Or you can take the example of price of hotel rooms. The price of hotel rooms will be different during vacation time and it will be lesser during lean season, because in lean season there will be less demand, so prices will be less. So if we consider second scenario where demand is less than supply, so the price will be less. However, there are other factors also that influence the price, but we are not talking about those factors. For the sake of understanding, we are considering those factors as constant. So if demand is higher than supply, price will increase. If demand is lower than supply, price will decrease. Now let's understand how international trade works. First thing first, let's just take the example of India and Saudi Arabia. Since the currency of Saudi Arabia is Saudi Riyal and the currency of India is Indian rupee, so both countries have different currency. So for common trading, they use US dollars. Now what is export and import? If India purchases something from other country, it will be import for India and India will pay in dollars. In this example, if we purchase something from Saudi Arabia, say we purchase oil from Saudi Arabia, we will pay Saudi Arabia in dollars. That will be import for us. Now if we sell something to Saudi Arabia, say basmati rice, so that will be export for us and Saudi Arabia will pay us in dollars again. So when we export something, we sell something to other country and we earn dollars. And when we import something, we purchase something from other country and we spend dollars. Now what is trade surplus and trade deficit? Let's consider trade surplus first. When a country export more and import less, that means total export is higher than total import, then the country will be trade surplus. So in that case, the country will earn more dollars and it will spend less dollars. So the supply of dollars will be higher. Now if we consider trade deficit, in that case, if a country import more as compared to export, so in that case, the country will have to spend more dollars than what they actually earn, because when we import something, we will have to pay in dollars, and when we import more as compared to export, so that simply means we will have to spend more dollars on our imports than what we actually earn through our exports. Now what is currency appreciation and currency depreciation? When the value of currency increases, it is currency appreciation, and when the value of currency decreases, it is known as currency depreciation. This increase and decrease is based on the market factors. When the value of currency of a country is deliberately reduced, it will be devaluation. So when it is decided by market forces, it will be depreciation, and when it is deliberately reduced through the central bank of that particular country, it will be devaluation. Now what are the key reasons for the fall of rupee? First is trade deficit. India is a trade deficit country. That means we import more than we actually export. And because of this reason, we always need more dollars than what we earn through exports. And due to this trade deficit, dollars are always in high demand. And since demand is higher than supply, the price of dollar increases. That means the value of dollar increases and the value of rupee decreases. Another factor is oil prices in international market. The oil prices in international market are increasing. In 2016, the oil prices per barrel were around $30. Now in 2018, they are crossing $80 per barrel. So because of increased oil prices, our imports are getting costlier because India imports 80% of its oil requirements. So if the price of oil increases, it increases our import bill. That means we will have to spend extra dollars for that same quantity. So we need more and more dollar. The demand of dollar increases. So the value of dollar will increase and the value of rupee will decrease. Next thing is recovery of US economy. After 2008 global financial crisis, US economy was not performing well. At the same time, India was doing relatively better. So a lot of investors invested in Indian economy for better return on investment. Now US economy is reviving. So that's why they are pulling out the investment from Indian market and they are investing it in US markets. So due to this capital outflow, dollars are pulled out from Indian market and then they are invested in US market. So that simply means the supply of dollar got reduced. Since the supply is lower than the demand, the value of dollar will increase. Apart from that, the US Federal Reserve also announced an interest hike. That means investors see a better perspective of return on investment in US market. And last but not the least is trade wars. The trade wars may also have impact on the fall of rupee. As per the experts, because of trade war, China may devaluate its currency in order to keep its exports competitive. Now let's understand it through an example. Let's say $1 is equals to 7 yuan. Yuan is the currency of China. So $1 is equals to 7 yuan. Now if China export a product having a price of 7 yuan to a US customer, so the US customer will pay 7 yuan. That means $1 will be paid. Now if China devaluate its currency, the same product can be purchased by US customer in less than $1. So in order to keep its exports competitive despite the additional tariff imposed by US on Chinese products, China may devaluate its currency, and this currency devaluation will increase the competitiveness of Chinese products in global market. So as per experts, this is not a good thing for India because Indian exports will be relatively less competitive. So this will again increase our trade deficit because our exports will decrease. Thank you, and subscribe to the channel for latest notification. Thank you, and that's all for the day.